Hello and welcome. You're watching Business Today Television. I'm Tanya Neja. Well, the Indian markets are trading at all-time high levels amid robust inflows from foreign investors on the back of improving macroeconomic fundamentals. Now, it's a fact that investing in equities through mutual funds is considered one of the best options. However, investing in mutual funds may sound easy, but selecting the right fund can be challenging. So, in this episode, we are going to discuss the steps to select the right mutual fund and also the right time to book profits. My guest on the show today is Viral Bhatt. He's the founder of Money Mantra. Thank you so much, Viral, for taking the time out and joining us here on Business Today Television. And I think investing in mutual funds has become increasingly popular, over the years due to its simplicity and accessibility. However, choosing the right mutual fund for a specific financial goal is important. So, what would be your advice? I mean, how should one really start, and how should we, select the right fund?
Yeah, thank you, Tanya. Thank you for having me on this show. So, yeah, it is always a question mark whenever anybody is building a mutual fund portfolio. So, there are few things I always tell to look upon to whenever they are building a mutual fund portfolio. So, first most important point is whenever anybody is searching on the website or speaking with their financial professional or financial advisor or financial distributor, first of all, they always say that past performance is look very good. So should I invest in that? So yeah, so first parameter that past performance is good, definitely, but it is not past performance is not guaranteed as well. But it's a very good first indicator whenever you are selecting any particular mutual fund, because there is a process. It is not like that it's one thing will work for you. There are other things also you have to keep in mind. So in that first, I think you should look at the past performance, but it is not always the case. Second thing, I think the fund manager. You have to look into the fund manager profile also, and then how that particular fund manager is overall performing in that particular mutual fund company and their background. Because see, many times what happened that fund manager come and go as well. They are living frequently. So if there is the case, then you should avoid that particular fund house or that fund manager scheme. Then the third thing is that you should look into the rolling returns. Rolling returns whenever you are selecting any particular mutual fund, the consistency of that fund is most important part. So whenever you are selecting any particular mutual fund or for your financial investments, you should look into the rolling returns. And I think best fund uh, try to shortlist the 4 5 fund or 6 7 funds, and then look into the past performance, consistency, fund manager, and the last and most important, the mutual fund consistency on their performance. So if that particular mutual fund company, asset management company, having any process or not, they are diluting with their process or not, they are performing, looking at their process and the selecting the stocks, the procedure, the whole process is having any consistency, or they are missing any link in that. So these are the 4 5 things any beginner or any investor should look into that whenever they are selecting any mutual fund.
Okay, absolutely got that. And also, Viral, if you talk about SIPs, I mean, contributions through SIPs rose around 7% from the previous month to a record 147 billion rupees in the month of May. However, with markets hitting all-time high now, many mutual fund investors are now wondering, whether to book profits or continue with their systematic investment plans. So, your thoughts on this?
So, see, whenever a systematic investment plan or any mutual fund investments comes into the picture, that let's say market is all-time high, that is fine. But if you are entering right now, or if you have just entered, let's say 6 months before, or 1 year before, or in that case 2 years before also, see, mutual fund is a very diversified kind of a investment instrument where you have to diversify your mutual fund. You don't have to sell in panic. So if you have any particular reasons to sell, let's say any emergency or any kind of thing, but you have to be disciplined, you have to be consistent, yeah, as far as you are doing your systematic investment plan. And see, at the end, mutual fund is an indirect way of investing in stock market, right? It is if you talk about equity mutual funds, it is definitely connected to the volatility and the up and downs of equity markets. So right now it's all time high, but it's, you never know that down the line 2 months or 3 months, there kind of any particular news happened in the market, and market will go down also. So stay disciplined, stay diversified, and you should target your time horizon. So once you clear with your time horizon, then this selling in panic or exiting with the mutual fund will not be the case.
Okay, absolutely. And also, Viren, let's talk about the categories also. I mean, can you tell us about the best mutual funds category, to invest in, especially at this point in time when the markets are at, I mean, record high levels?
Right, Tanya, today market hit the all-time high, and we are talking about when should any particular investor enter into the market, or if let's say any particular investor maintaining their investment portfolio from last 2, 3, 5, 7, 10 years also, then see, every market, upside market or downside market, create the opportunity. So
Hmm.
if I say maybe if any particular person or investor looking at the all-time high market, their
Hmm.
fund performance may not give good returns. It may possible. So looking at the Nifty 50 stocks or Sensex 30 stocks will not be the right case for them, right? So
Hmm.
looking at the current market, it's all-time high, but
Hmm.
definitely there are large cap and mid cap category kind of funds. People should look into that, and
Hmm.
definitely if their horizon is a longer run horizon, let's say when I'm saying longer horizon, it should be more than 7 years or 10 years. Then in that
Okay.
case, mid cap and small cap is a very good case for to enter into right kind of this kind of market.
Okay. Okay, absolutely. That's the word coming in. And lastly, Viral, many investors now believe that portfolio diversification is also important, and that's why I think it's they are investing in so many mutual funds at this point in time. So I want to ask you, that is investing in too many mutual funds bad, according to you?
Absolutely, Tanya. Any person, let's say in the case of any beginner should kind of what should keep in mind while building the mutual fund portfolio. Start slowly and steadily, right?
Hmm.
Should pick at least 3, 4, 5 funds, not more than 5 funds in their portfolio. Can look
Okay.
first target the time horizon. Let's say
Hmm.
to simplify these things, let's say he's having 3 years or 5 year or 7 year, three or four kind of a time horizon in their investment time horizon investment profile. Then to begin with, start with a debt fund, add one more balanced kind of a fund, hybrid kind of a category fund,
Hmm.
then flexi cap or multi cap kind of a fund. But overall, 4 to 5 funds are more than enough to having the mutual fund portfolio.
Okay, that's the advice coming in. And on that wonderful note, thank you so much, Viral, again for taking the time out and joining us here on Business Today Television.
Pleasure. Thank you.
So, with that, let's wrap up this special episode. But you stay tuned for all the latest market updates, and many thanks for watching.
If you like the video, do like, comment, share and subscribe.